Our next guest expects 2025 will be a volatile year for markets in general, with concerns over Trump tariff threats and the Federal Reserve not cutting rates as much as expected. But she also highlights cyclicals as a winning sector. Joining me now is Laura Lau, CIO of Brompton Funds, and she is gracing us with her presence in studio again. Nice to see you.
Thanks for having me, Mark.
Yeah, and you've been traveling, quite incredible travels, it sounds like.
Yes, I just came back from Patagonia and Antarctica.
Wow, amazing. I'm sure you've got some stories. So let's start with your outlook here. You're talking about the potential for volatility. Would you say we're already kind of getting a taste of it in the early days of this year?
There's no doubt about it. 2024, we had the Trump bump, with the euphoria over Trump being elected, and then he started opening his mouth. And we saw in December some of that volatility, talking about tariffs, talking about, clamping down on immigration, and that's going to continue into this year. So what I'd say is a lot of the things that people are worried about will be front-end loaded. What I mean by that is it looks like he's going to concentrate on tariffs, which is something he can do when he comes into office right away. And also he's going to concentrate on, trying to clamp down on immigration. Some of the things that are more positive that people would like would be, deregulation, trying to bring down taxes. That will be more back-end loaded, likely, because, for deregulation, you have to appoint people, they have to be approved, and then for taxes, you need Congress to vote. So those would be more back-end loaded. But what we have seen is, what they call the animal spirits. People seem much more positive in expecting a more business-friendly environment. And again, that takes time. It takes time for people to be hired. It takes time for capital projects to be approved. So that's why we think that back-end load will be better, and the Fed does see this. So certainly tariffs are inflationary, less labor is inflationary, so likely they will be cautious in cutting rates.
Now, in terms of how the major indices will fare this year, you're expecting the S&P 500 with maybe about a 10% gain, and that the TSX will outperform. So can you elaborate on those ideas?
So what we've seen in the U.S. is it looks like the Fed's engineered the impossible, a soft landing. So with that, we expect earnings to increase about 12% for the year. But since we do see that the U.S. is an expensive stock market, it'll probably go up about 10%. History has shown that if there's no recession, the markets they tend to go up. And Canada, we're a much, much cheaper market. And we actually, because we are more cyclical, and we do favor cyclical companies right now, the economy is improving, Canada actually will outgrow the U.S. in terms of earnings. So that's why we think that probably first half of the year will be rougher we figure out what the visibility is happening with tariffs, figure out what's happening with the politics in Canada. And in the second half, we're going to see some of those tailwinds, we think, from a better economic business environment from the U.S. and Canada.
And you think that the financials will benefit or should benefit from deregulation? A couple of names you have for us, one in Canada, CIBC, and then Goldman Sachs in the U.S.
So what we're seeing is